Imagine waking up tomorrow and never worrying about money again. Seems impossible. Robert Kiyosaki proved it's not. Millions of people around the world have discovered that there are simple rules that the rich follow and that you can start applying today. What you're about to read now is not theory. These are practical strategies that work. In 90 days, following these 5 rules, your financial life can be completely transformed. Your next paycheck might truly be the last one you need as an employee. Why do most people remain trapped in the cycle of poverty? The answer is simple. They don't know the rules of the game. While we study to be good employees, the rich study to be investors. This is the first major difference. Robert Kiyosaki teaches that there are 4 types of people in the financial world. First, employees who work for money. Second, self-employed who own their own jobs. Third, business owners who possess systems that work for them. And fourth, investors whose money works for them. The big question is, which quadrant are you in? And more importantly, which quadrant do you want to go to? The first rule to change your financial life is to change your mindset. Stop thinking like an employee and start thinking like an investor. Employees ask, how much do you pay me per hour? Investors ask, how much will this asset pay me per month? This mental shift is fundamental because it determines all your financial decisions. When you think like an employee, you trade time for money. When you think like an investor, you make money work for you, even while you sleep. But how do you make this transition mentally? Start small. Every time you receive your salary, ask yourself, how can I use part of this money to buy assets that will generate income for me? This simple question will completely change your relationship with money. The second rule is to understand the difference between assets and liabilities. This is probably the most important lesson you'll learn today. Kiyosaki defines it simply. An asset is anything that puts money in your pocket. A liability is anything that takes money out of your pocket. It seems obvious, but most people confuse this constantly. They believe their house is an asset, when in reality it's a liability. Your house doesn't put money in your pocket monthly. It takes it out through financing, taxes, maintenance, and insurance. A true asset would be a rental property that generates monthly income higher than all costs, dividend-paying stocks, a business that functions without your presence, copyrights from a book or music. These are real assets. Starting today, every time you're about to spend money, ask this question. Is what I'm buying an asset or a liability? If it's a liability, think twice. If it's an asset, accelerate the purchase. The third rule is to focus on financial education, not on earning more money. Most people believe the problem is lack of money. Kiyosaki teaches that the real problem is lack of financial education. You can earn $1 million per year, but if you don't know how to manage it, you'll still be poor. On the other hand, you can earn only $1,000 per month, but if you know how to invest correctly, you can become rich. The difference lies in knowledge. Dedicate at least 30 minutes per day studying investments, financial markets, entrepreneurship, and money management. Read books, watch videos, take courses. Treat your financial education as an investment, not as a cost. When you invest in knowledge, you're buying the most valuable asset that exists, your ability to generate income. An employee can lose their job, but an educated investor will always find opportunities. The fourth rule is to create multiple sources of passive income. Poor people have one source of income, their salary. Rich people have several sources of income that work independently of their time. Start by identifying your skills and knowledge. What do you know how to do that other people would pay to learn or have? Transform this into a source of income. It could be an online course, consulting, digital product, or service provision. In parallel, start investing in financial assets, even if it's just 10% of your salary initially. The important thing is to start. Stocks, real estate funds, treasury bonds, cryptocurrencies. Diversify and learn through practice. The goal is to have at least 3 active income sources in the next 90 days. This may seem ambitious, but it's totally possible when you focus and act with determination. The 5th and final rule is to reinvest your profits into more assets. This is the secret of exponential wealth growth. When your investments start generating profit, don't spend that money. Use it to buy more assets. This is the difference between rich people and people who remain in the middle class. The middle class uses profits to increase their standard of living. The rich use profits to increase their assets. Imagine you manage to get an extra income of 1,000 rials in the first month. Instead of spending those 1,000 rials, use them to buy more income-generating assets. In the second month, you'll have the original income plus the additional income from the new assets. This compound effect is what creates real wealth. Einstein called it the most powerful force in the universe. When you understand and apply the power of compound interest, your income grows geometrically, not arithmetically. Now let's get to the practical 90-day plan. In the first 30 days, focus on mindset change and education. Read at least 2 books about investments. Watch videos about financial education. Start seeing opportunities where you previously only saw problems. In the second 30 days, implement your first extra income source. It could be selling something you know how to do, providing consulting, or creating a digital product. The important thing is to generate the first additional reel. In the third 30 days, use the extra money to buy your first assets. It could be some stocks, real estate fund shares, or even equipment to expand your business. The important thing is to start the virtuous cycle. Why do these rules work? Because they're based on fundamental principles that govern money. Money is not emotional. It follows specific laws. When you understand and respect these laws, money comes naturally to you. The biggest mistake people make is trying to invent their own financial rules. They believe they can break the fundamental laws of money and still succeed. This never works. The rich aren't smarter than you. They simply know and follow rules that you haven't learned yet. Now that you know these rules, you can apply them and get the same results. Obstacles you'll encounter along the way. The first obstacle will be your own mind. You've been programmed since childhood to be an employee, not an investor. Breaking this programming requires conscious effort. The second obstacle will be the people around you. When you start acting financially different, many will try to discourage you. This is normal. Poor people want you to stay poor so they feel better about their own choices. The third obstacle will be the lack of immediate results. Building wealth is like planting a tree. It takes time to see the fruits, but when they arrive, the harvest is abundant and lasting. The importance of acting now. Every day you postpone is one less day of compound growth. If you start today, in 10 years you'll be incredibly rich. If you start in 10 years, you'll need to work until you die. Time is your greatest ally when it comes to investments. The earlier you start, the smaller the amount you need to invest monthly to reach your financial goals. Practical examples to start today. Open an account with a brokerage and buy your first stocks, even if it's just a 20 real stock. The important thing is to break the psychological barrier and officially become an investor. Identify a skill you possess and create a way to monetize it. If you know how to cook, you can give online cooking classes. If you understand technology, you can provide consulting. If you have professional experience, you can mentor other people. Start tracking all your expenses. Use an app or spreadsheet to know exactly where your money is going. You'll be shocked to discover how much money you waste on unnecessary things. The power of financial discipline. Wealth isn't about earning a lot of money. It's about keeping more money than you spend and investing the difference wisely. People who earn little but save and invest consistently become rich. People who earn a lot but spend everything remain poor. Develop the habit of paying yourself first. As soon as you receive any money, immediately separate a percentage for investments. Treat this as a mandatory bill, not optional. The difference between rich and poor lies in their mindset about debt. Rich people use debt to buy income-generating assets. Poor people use debt to buy money-draining liabilities. If you have credit card debt to buy clothes, you're using the wrong tool. If you have financing to buy a property you rent out, you're on the right path. Learn to use financial leverage in your favor. Banks love lending money to people who already have money because they know these people understand how to multiply resources. When you become financially educated, you can use other people's money to accelerate your wealth. How to calculate if an investment is worth it. Kiyosaki teaches a simple formula. The monthly income from the asset should cover all expenses and still leave at least 10% net profit. If a property costs $200,000 and rents for $2,000, but costs are $1,900, it's not a good deal. Look for investments that generate at least 1% monthly net return. This rule applies to any investment. Dividend-paying stocks, real estate funds, own businesses. Always calculate the real return after discounting all costs, taxes, and risks involved. The fatal error that breaks most beginning investors. They invest money they can't afford to lose. Never invest money you need to live on for the next 12 months. Investments can lose money in the short term, even the best ones. Always have an emergency reserve before starting to invest. Build your emergency reserve equivalent to 6 months of expenses first. After that, all extra money should go to assets. This order is fundamental to not go broke halfway through. Why formal education doesn't teach about money. The educational system was created to form employees, not investors. Schools teach you to work for money, but never teach how to make money work for you. That's why you need to self-educate financially. The rich teach their children about money from an early age. They talk about investments, business, and opportunities in daily life. You can start doing this with yourself now, regardless of age. The power of financial contact networks. Kiyosaki always says, your network is your net worth. The richest people you know can teach you more in one conversation than years of theoretical study. Seek to frequent environments where investors and entrepreneurs meet. Participate in investment events, financial study groups, practical business courses. Don't go to sell anything, go to learn and build relationships. An investment tip from someone experienced can be worth millions. How to protect your wealth when it grows. Rich people don't keep all their money in one place. They diversify across different asset classes, countries, and currencies. When you start accumulating wealth, study about asset protection. Learn about legal entities, investment funds, overseas assets. It's not to evade taxes, it's to protect your assets from economic crises, runaway inflation, and sudden political changes. The abundance versus scarcity mindset. Poor people believe money is limited, and that for some rich people know that wealth can be created infinitely. When you help other people make money, you also make money. Change your mindset from competition to collaboration. Look for businesses where everyone wins. You, your customers, your partners. This is the foundation of great financial empires, mistakes that cost dearly and how to avoid them. Never invest in something you don't completely understand. It doesn't matter how many people are making money. If you don't understand the mechanism, don't invest. Financial frauds always exploit greed and ignorance. Be suspicious of promises of very high returns without risk. In the financial world, return and risk always go together. If someone promises 30% per month without risk, it's a scam. Realistic returns range from 0.5% to 2% per month for safe investments. The final test of financial intelligence. You'll know you're on the right path when you start thinking in terms of cash flow, not assets. Assets are what you have. Cash flow is what you receive monthly without working. A person with 1 million sitting in savings is poorer than a person with 100,000 invested generating 5,000 per month. The second has financial freedom, the first just has a large reserve. The transformation of the next 90 days. If you apply everything you learned here consistently, in 90 days, your financial life will be unrecognizable. You'll think differently, act differently, and have different results. But don't expect overnight miracles. Real wealth is built brick by brick, decision by decision, investment by investment. The important thing is to start today and never stop. Your next paycheck might indeed be your last. Not because you'll become rich in a month, but because you'll have started the journey that will inevitably lead you to financial independence. Every real you received from now on will be an opportunity to buy your freedom. The difference between you and millionaires isn't luck, inheritance, or superior intelligence. It's knowledge and consistent application of these principles. Now you have the knowledge. The application depends only on you. The psychology behind financial success. Kiyosaki discovered that the biggest obstacle to wealth isn't lack of money, but fear and doubt. Fear of losing money, fear of being rejected, fear of appearing greedy. These emotions keep people trapped in financial mediocrity. Rich people feel the same fears, but act despite them. They know that the biggest risk is taking no risk at all. In a world where inflation constantly erodes your purchasing power, leaving money idle is a guarantee of impoverishment. Develop financial courage by starting small. Invest amounts you can lose without desperation. As you gain experience and confidence, gradually increase your investments. Courage is like a muscle that needs to be exercised. How to identify opportunities others don't see. Rich people see problems as business opportunities. While others complain about traffic, someone creates a transportation app. While others criticize lack of education, someone creates online courses. Start observing your daily life with entrepreneurial eyes. What problems do you face that other people also face? How could you solve these problems profitably? Every problem is a disguised opportunity. Keep an idea notebook. Write down all the frustrations, difficulties, and unmet needs you observe. Many of these notes could become million-dollar businesses in the future. The power of small, consistent actions. Most people want enormous results immediately. When they can't get them, they give up. Kiyosaki teaches that wealth is built through small actions repeated consistently over time. Investing 100 reais per month may seem insignificant, but in 20 years, with compound interest, it can become a substantial amount. The secret isn't in the initial value, but in consistency and time. Create automatic investment systems. Set up automatic transfers to your investment accounts. When the process is automatic, you remove emotion and procrastination from the equation. The importance of measuring and tracking results. You can't improve what you don't measure. Rich people meticulously track their revenues, expenses, investments, and returns. They know exactly how much each asset is generating monthly. Create a simple spreadsheet or use apps to monitor your net worth monthly. See the difference between assets and liabilities growing in your favor. This visual tracking is extremely motivating. Establish specific and measurable financial goals. Instead of, I want to get rich, define, I want to have 10,000 reais of passive monthly income in 5 years. Specific goals generate specific plans. How to accelerate your results through partnerships. No one gets rich alone. All great empires were built through strategic partnerships. Find people who complement your skills and share your financial objectives. If you're good at sales but don't understand technology, find a technical partner. If you have capital but don't have time, find someone who has time but needs capital. Well-structured partnerships dramatically accelerate results. Always formalize partnerships in writing, even with close friends. Clearly define responsibilities, profit sharing, and exit criteria. Many friendships are destroyed by financial misunderstandings that could be avoided with clear contracts. The different types of passive income and how to build them. Passive income doesn't mean you don't need to work to create it. It means that once created, it continues generating money without your constant presence. There are several categories of passive income. Financial investment income, stock dividends, bond interest, real estate fund rents. This is the most passive of all, but requires initial capital. Start small and reinvest profits to accelerate growth. Intellectual property income, royalties from books, music, online courses, apps. Once the product is created, it can generate income indefinitely. This category has unlimited scaling potential. Systematized business income, companies that function without your daily presence. This requires building solid teams and processes. It's more laborious initially, but can generate large volumes of income. Advanced tax optimization strategies. As your income grows, taxes become a significant expense. Rich people don't evade taxes, but use legal strategies to minimize them. Learn about legal entities, tax regimes, and tax incentives. Consider opening a company for your investment activities. Companies have tax benefits that individuals don't have. Consult an accountant specialized in tax planning to structure adequately. Study private pension plans, life insurance with survival coverage, and other instruments that offer tax benefits. Every real legally saved on taxes is one more real to invest. How to protect yourself from economic crises. Crises are inevitable, but they're also the greatest opportunities for enrichment. During crises, assets become cheap and the well-prepared can multiply their wealth quickly. Always keep a cash reserve to take advantage of opportunities during crises. When everyone is selling in panic, you can be buying at a discount. The greatest fortunes were made during periods of crisis. Geographically diversify your investments. Don't put all eggs in your country's basket. Invest in international assets to protect yourself from local crises. Strong currencies, foreign stocks, and overseas real estate are options to consider. Long-term mindset versus quick gains. Modern culture encourages instant gratification, but real wealth requires long-term thinking. While others look for get-rich-quick schemes, focus on building solid foundations for lasting wealth. Warren Buffett, the most successful investor in history, says his favorite investment period is forever. When you buy quality assets with the intention of keeping them for decades, the power of compound interest works in your favor extraordinarily. Avoid the temptation of day trading and risky speculation. These activities are more like gambling than real investments. Focus on assets that generate consistent income over time. How to teach financial education to your family. The wealth you build must be preserved and multiplied by the next generations. This only happens when you transmit financial knowledge to your children and spouse. Involve your family in investment discussions. Show how compound interest works. Explain the difference between assets and liabilities. Discuss business opportunities. Make financial education a natural topic in your home. Create allowances based on results, not age. Teach your children to earn money by solving problems or creating value. This entrepreneurial mindset will be invaluable in their future. The role of technology in modern wealth creation. We live in the most prosperous era in human history thanks to technology. Today, it's possible to create global businesses with minimal investment. Learn to use technology as leverage for your financial goals. Digital platforms allow selling products and services to the entire world. Social networks offer free marketing. Investment apps have democratized access to financial markets. Use these tools in your favor. Invest in your digital literacy. Even if you're not young, it's fundamental to understand how the digital world works. Many of the greatest income opportunities are in the online environment, signs that you're on the right path. How do you know if these strategies are working? First sign, you stop thinking in terms of hourly salary and start thinking in terms of monthly asset income. Second sign, you get more excited buying stocks than buying clothes. Third sign, you start seeing opportunities where you previously only saw problems. Fourth sign, your passive income, even small initially, is growing consistently month by month. Fifth sign, you no longer feel anxiety thinking about the financial future. When these signs appear, you know you've internalized the rich mindset. From then on, it's a matter of time and persistence until reaching complete financial independence. Start today. Start now. Open the brokerage, buy the first stock, create the first extra income source, make the first investment. Time is your greatest ally, but only if you start using it in your favor immediately. Your financial future isn't in the hands of the government, your boss, or the economy. It's in your hands. And these 5 rules are the keys to unlock all your wealth potential. Remember, your next paycheck might really be the last one you need as an employee. Not because you'll become a millionaire overnight, but because you'll have initiated the irreversible process that will inevitably lead you to total financial freedom. The power is in your hands. Use it wisely. And now I want to speak directly with you. If this content has brought value to your life, if it has opened your mind to see money in a different way, I ask you for a special favor. Leave your like on this video. This helps a lot so that this message can reach more people. And if you haven't done it yet, subscribe to the channel and turn on the notification bell. That way you won't miss the upcoming videos, where we'll keep bringing stories, strategies, and lessons to transform your relationship with money and build your financial freedom.